Hello, my name is Jess Etherington, and welcome to Accounting 22107, a series of screencasts on the accounting language. Today, I'm going to teach you the basic vocabulary of journal entries, in the hope that you too will be able to follow the impacts of a transaction on financial accounts. In the language of accounting, a journal, put simply, is a chronological record of transactions. Just like when you were a child recording your adventures into a journal on your trip to Disneyland, journal entries are recorded into a general journal. Now let's look at an example of a journal entry from that souvenir shop where you bought that priceless clock. The first thing to note about a journal entry is that they always affect two or more accounts. Just as your piggy bank would have lost some weight, the transaction would have increased the souvenir shop's cash balance. This same principle is carried through in the business under the double entry system based on the dual nature of accounting. Here on the left-hand column, we have the date, which you purchased the item, recorded as the date of transaction. This date is essential in determining the chronological order of sales. Further, when examining their journal, businesses can assess whether transactions were recorded correctly and adjust entries accordingly. To the right of this date, we have the accounts affected by this transaction. The accounts receiving a debit entry are recorded first, while the accounts receiving a credit entry are slightly indented below. Now you can see they debited cash as an increase to their asset account because they received cash from your sale, while they credited inventory as a decrease to their asset account because their clock inventory decreased from the sale. Now, following the principle of a double entry system, the totals in the debit and credit columns should be the same in each transaction. As you may recall, my earlier screencast on economic assumptions addresses how the monetary unit is the best means of communicating the accounting language. Moreover, under the headings of debit and credit, the monetary value of the sale is recorded alongside the accounts affected. Finally, this entry is closed by an explanation of the transaction that took place to make the accounts change. Just as your dad might have asked where all your pocket money had gone, this explanation surmises what you spent your money on. Now that you understand the basic format of a journal entry, you too can create a chronological journal of your transactions. Thank you, and join me next week as I examine the trial balance, in the hope by the end of this series you will have a fluent understanding of the language of business.